All right, everybody, welcome back to another video here on Financial Friends. Today, we are going to discuss why every single dollar that you can invest matters. We're going to take that dollar, we're going to stretch it out over 40 years, we're going to wind that back to 35 years. We're going to take a look at the difference of just 5 years over a long time horizon, and I'm going to tell you that every single dollar you can get into the market as soon as possible is going to be beneficial for you over the course of the long term. And we're going to use one of the best websites in the world to motivate people to begin investing, and that is simply investor.gov. So let's go ahead, let's dive into the video. But before we do, if you are new to Financial Friends, this YouTube channel, all of the content I put out over all social medias is for people who love business, finance, and investing. If that's you, I'm posting things every day across all platforms, but definitely go ahead and hit subscribe here. There are 3 different videos a week. We're on the road to 1,000 subscribers. Of course, this is a money channel. I'm looking to monetize the YouTube channel, so help me out, hit subscribe, and let's go ahead and dive into the video. So, as I told you, every dollar matters. So we're going to take a look at $1. $1 is our initial investment here, and we're going to go ahead and not add anything. Now let's take a look at if we could wait 40 years. So this is if you're 20 years old like I currently am, waiting till 60. If you're 30, waiting until 70. You get the gist here. 40-year time horizon. Okay? So 40 years, and you can obviously do this on your own time, plug in your own numbers, but $1 over 40 years at 7%, which is somewhat of an average across all the different people you could possibly ask as per the return for the S&P 500 or the top 500 companies within the United States. We're going to use that number 7%. Let's go ahead and calculate this out. In 40 years, our $1 would turn into $15 or $14.97. Now the power of that investment can be displayed by walking it back a couple of years. So let's say instead of investing for 40 years, we could only invest for 38 because we decided to wait a couple years before putting some money in. Now, any dollar that you put in after that initial 40-year time horizon, if you put it in 2 years later, it's only going to be worth $13.08. And if you waited 2 additional years and only got to invest for 36, you'd be down to every dollar being worth $11.42. And if you waited 1 more additional year, so 5-year difference overall, your $1 would be worth $10.68. Now, this seems not too important. A couple of bucks, waited a couple of years, maybe I was able to do some things. That's cool. This is every individual dollar. So we have to take the difference between investing for 40 and investing for 35 years and multiply the $4.29 difference between $10.68 and $14.97 and multiply that to every dollar we could have possibly invested. So this is those numbers here blown up. 1 year or $1, 40 years, $14.97, all the way down to $1, 35 years, $10.68. We just ran those numbers. But that $14.97 to $10.68 is $4.29. And let's say you could have invested $10K when you were 20 years old, but instead you bought a car. And maybe you already had a car, but you wanted a new one. That difference of waiting an additional 5 years after you paid your new car off cost you $42,900. And that's just with one investment. Of course, after that initial year, you could have invested again and held it for 39 years, and you missed out on the difference between 39 years and 35 years, and so on. You get the point that every dollar really, truly matters. Okay? Now, of course, we can expand this out even further and just say that we should be investing for as long as possible. Let's take $1 and invest it for 10 years. Our $1 could turn into $1.97, nothing special. But if we waited 20 years, our $1 could turn into $3.87. And then if we waited 30 years, our $1 could turn into $7.61. And if we waited 40 years, well, we've ran that math a couple of times, we know it's going to be $14.97. And if we waited 50 years, so we gave ourselves an extra 10 years, maybe we worked a part-time job when we were older, maybe we just got really lucky and our parents did some investing for us, that could turn into $29.05. $1.46. This is the power of compounding. That 10-year difference between $15 or $14.97 and $29.46 is $14.49, nearly doubled. Okay? Now, I have this again displayed because I feel that it's very important. $1.90 was gained over the course of 10 years. And then another 10 years, $3.74 was gained. And then another 10 years, $7.36 was gained. And yet again, another 10 years, $14.49 was gained. This is compounding at its finest. This gap gets larger and larger and larger and larger. And I'm saying that every single time because I'm stressing that getting your money invested, even if it is just $1, can work wonders. Now, of course, this difference is again multiplied by however many dollars you have invested. And this is compounding, so the growth over time at its finest. So don't think that if you're 20 years old and you have a couple $100 to invest that you shouldn't do it. If we took that $500 that you're contemplating right now, and we made monthly contributions of $50 for 40 years at 7%, we could have $127,000. And nobody can sit there and tell me that $127,000 is any better than having not invested that money in the first place. And let's just say, just because we take away that $500 and we make a $1 initial investment, our $127,000 drops to $119,000. That was a difference of $499 that cost us, let's do the math again, $119,000 all the way up to $127,000. The value of your early dollars, your early investments are crucial, and they play a massive role in being able to compound your portfolio. If you're sitting on $1,000 and you're 20 years old right now and you know you can commit an additional $100 from your work over 40 years, you could have $254,000. Let's say as you grew up, you knew you could contribute $250. We're going to go ahead and stretch this 35 years because you waited a little bit, you got a big boy job, but you invested $5K when you were younger. We now have $468,000. And if we stretch this over 5 more years because we did some investing in our 20s, a little bit more investing in our 20s, we now have $673,000. So you can see only a few dollars can continue to change the course of your investment life. Every single dollar that you can get in the market matters. This has been another video on Financial Friends. Thank you so much for tuning in. I truly hope you were able to pull something valuable from this video. If you did, comment that down below. I know everybody has regrets of not getting invested sooner. Don't have any regrets. Get that cash into the market. Go ahead, do your due diligence, learn, and do your best to start investing. Now, of course, not professional investment advice. This is just my personal opinion. Thank you very much for watching. I hope that you have an amazing day. Take care.